am Brandy Whitmire. I am a direct lender. I also broker out. Basically, if I have all the products that you can imagine. If there's not a product I have, then more than likely I'm going to be able to send you in the right direction. If you need a real estate agent, if you need any information on real estate needs, realtors, painters, lending, whether I can do it or not, we can find you the avenue and lead you in the right direction. So again, Brandy Whitmire, please send us your questions. Get pre-approved. Let us run your credit. Let us help you. We are credit specialists. We can do anything under the sun. So just reach out. If we can't help you, that's fine. We'll send you over to the right place. So again, this week I want to talk about the difference in rate versus closing costs. So a lot of you will go onto a website and you'll think, and you'll see, hey, a 30-year fixed rate is this interest rate. So let's say you go to a website, you go online, what's the current day 30-year fixed rate? And let's say it says 4%, okay? 4% on a website, you need to look at the fine print. What does the fine print say? Does it say that it has to be above a $200,000 loan amount, above a 720 credit score? Is there 1 point to buy down that rate? What does that mean? What does buy down mean? What does that mean to you? So these are important things to think about. So what I want to talk about is how to read a rate stack. A lot of people think if you go online, you see a 30-year fixed rate and it says 4%, 5%, whatever the case may be, that's the interest rate. That's the going standard rate. And it might deviate a little bit here and there. Can I get 4? Can I get 4 1/8? Can I get 3.875? What interest rate can I get? Okay. What you see online, let's say it's Bankrate or LendingTree or Lower My Bills or BrandyWhitmire.com or whatever the case may be, that's not your rate. That's not a rate that you have to go with. You have an entire rate stack to choose from. So what that means is you need to ask your lender and you need to ask yourself, how long am I going to be in this home? What are my plans? The average person stays in a loan for 4.5 years. That could be because they refinanced to a lower term, they refinanced to a higher term. The rates went down, so they refinanced to a lower rate. They moved, they sold their house. Whatever the case may be, you either refinanced or you sold and bought something else or leased something, whatever the case may be, but you got out of that specific mortgage in 4.5 years. So when you're talking to your lender and they say, hey, the rate now is, your rate based off your parameters is 5%. Say, okay, what are my closing costs? How much are my closing costs on 5%? Okay, it's $3,000. Okay. I want a 4.5% rate. How much is that going to cost me? Well, you're going to buy down that rate and it's going to cost you one point. So you have a $200,000 loan amount. 1 point would be $2,000. Now your closing costs are $5,000. Okay. Hey, I only think I'm going to stay in this house about a year or 2 years, or I'm planning on refinancing to a 20-year or a 15-year or a 10-year to pay off my house sooner. In about 2 years, what is my breakdown on that? Can I get a loan with no closing costs whatsoever? Yeah. So what's the difference between a 4% or a 5% rate and a 5.5% rate? Let's say that the difference between a 5% rate and a 5.5% rate is $100 a month. Let's say at 5%, you're paying $5,000 to get there, right? You have to pay $5,000 in closing costs. Let's say at 5.5%, you're paying $100 more a month on your payment, but you have zero closing costs. You're not paying that $5,000. Ask yourself, would this $5,000 be more suited to pay down my mortgage balance? Would that $5,000 be more suited to upgrade the cabinets or the countertops in my kitchen? Would that $5,000 be more suited to pay off my high interest credit card, which is 9 to 30% right now? Would that $5,000 be more suited to pay off other things financially or to upgrade my house or do whatever? That's a question. And now let's say you're on fixed income or you have kids that are in high school and you know for sure I am not moving out of this house for another 5 years. I can't my youngest kid is in 8th grade. We're not moving out until they're out of high school. I want to stay on a fixed rate. You know, I don't want to do any of that. Does it make sense to go from 5% to 4.5% and buy down that rate and pay for that and pay to get a lower rate? Maybe, but it's all math. You know, the point of all of this is that you need to take a look and see exactly how much your rate versus your closing costs are going to be. And the difference of the monthly payment. If your payment's going to be $2,000 versus $2,100, but you saved $5,000 right now on your balance or at the closing table, I would recommend that you take that $5,000 and pay it towards your balance, because your interest that you pay is towards the balance of your mortgage. Or take that $5,000 and pay off that Citi Chase Discover card that's charging you 25% in interest. That might be the better case. Is it in all cases? No, but that's why it's important to ask. So the rate versus the closing cost has an adverse effect on each other. The higher the rate, the lower the cost. The lower the rate, the higher the cost. And in the middle of that is the par rate. And that's the rate that typically you're going to see online, but read that fine print. It's important to read that fine print and see exactly what the parameters are for that rate. And it's important to talk to a lender that understands finance, that understands interest, and that understands your actual goal in the future and what you're going to do with your loan. Are you going to refinance to a lower rate? A lower term? Are you going to renovate the house later? Do you know that your house needs some work and later on you want to do a renovation loan? Okay, then it doesn't make sense to pay all that in closing costs. So the base of this is, don't look at the interest rate online and just take it for what it is. You need to look at the interest rate and see what closing costs are attached to it, what the difference in your monthly payment is, and make sure it makes sense for what your goals are and what you plan on doing. So when choosing your interest rate, make sure you're talking to someone that understands how to manipulate money to work for you. This is very important. For me, I own several houses. I refinance once a year. I don't care what my interest rate is because I'm using my rate in order to pay all my closing costs. I never have a higher balance when I refinance. I'm skipping a payment or two. I'm taking that money and I'm putting it on high interest debt. I'm going to take that money and travel, go to Europe or go on a vacation. I'm taking that money and I'm putting it right back onto the balance of my home, because the majority of your payment goes towards interest, taxes, and insurance. It does not go towards your principal. So it's so important to put as much money towards your principal and towards your high interest debt as possible. This is imperative, and it's so important that you understand how money works and how to leverage the money that you are spending and pay down your debt and be financially free, and use that money in order to take your family on those vacations, in order to pay off your credit cards, in order to renovate your home and make that value higher whenever you're ready to sell it. Because what matters at the end of the day is how much money you get back whenever you sell. And if you keep on adding to your balance, and if you keep on taking money out of your bank account and it's not going towards high interest debt, you're doing the wrong thing. You're just doing the wrong thing. So make sure that you understand what you're doing, what your goals are, what is important to you, and make sure you're talking to a lender that understands finance and understands how to manipulate money to work for you. If you have any questions on how interest rates and how closing costs and how any kind of finance works on credit cards, student loans, car installments, whatever the case may be, make sure you call me. And if I can't help you, I will send you to someone who will. And I hope that everyone who's watching will at least reach out and give us a try, because I guarantee you, if I can't get it done, and then no one can. And if I can't, and it's something outside of my scope, I will send you to the person who can. So reach out, DM me. I've put my email address, I've put my phone number, I've put my website on this live. We are here to answer any of your questions. This is something I'm very passionate about. This is what has catapulted me to another level financially once I understood how that math worked, because everything in life is just math. Everything is a formula, and I guarantee I can help you in any way that you need. So reach out. Again, this is Brandy Whitmire. We do loans nationwide. We do every product in the sun, and I will see you next week on our next live. Hope to talk to you soon.